Hello, everyone. Welcome back to the Trading Room. I'm Shain, Vernier, and this is NFP Live. I want to welcome everybody that's in the Trading Room and welcome everybody abroad on YouTube. We always like to do this once a month to really get into what the U.S. labor market's doing and what exactly we can do to make money off of these big-time numbers. NFP, one of the biggest events of the month, coming to you live here from the Rocky Mountains. The sun's not even up over the Rockies, so I'm excited. I'm ready to be here. I think we got some good numbers. We got the powerful Connor Woods lurking in the shadows here in the trading room. We're going to throw some levels out. We're going to go over what NFP is just very quickly. So if you're brand new, feel free to tune in and learn a little something. And then we're going to get right into some levels. We're going to talk about how we can actually trade this. Then we'll see the number drop, and then we'll run the raffle, and we'll get everybody involved that has participated in the raffle. So once again, welcome. Very, very happy to be here. It's been a big week on the markets, big holiday week here in the United States. RBA, we led off the week with the RBA. Independence Day Tuesday was a big-time holiday, and one that had really compressed our news cycle this week and really led to a powerful Thursday session, which is just what we saw yesterday not too long ago, a big-time risk-off type of an environment and dynamic. And today, it's NFP Day, so once a month, first Friday of every month, we get in and get involved. So we got some familiar names in the room. Shruti Nair, good to see you. Barnacle, Lorianne, Jarzate, Big Sky. Yep, we're in Big Sky country today, Jarzate. I think there's some fishing in my future after we make a few pips this morning, that's for sure. Metro, good to see you. And as always, we just gave a big shout out to Connor Woods. Wizard Alvin, good to see you, Wizard. All right, guys, let's jump right on it. So that's what we've done in the trading room this week thus far. Key events, holiday, big-time Thursday session. All right, now let's get on with the show, and that's going to be U.S. non-farm payrolls. Now, this is just a quick snippet off of investing.com. Non-farm payrolls measures the change in the number of people employed during the previous month, excluding the farming industry. Job creation is the biggest indicator of consumer spending, which accounts for major economic activity. A higher than expected reading should be taken as positive or bullish, and a lower than expected reading should be taken as negative or bearish. So let's break down what exactly that means. Just think of it as the most important employment metric that comes out of the United States. The United States, key barometer of really global economic prowess, and that may be changing. We've seen a lot of talk about the BRICS nations and the BRICS are really getting on track with maybe a new global reserve currency. But for right now, this is sort of where it stands. NFP is the place to be. So how does NFP impact the Forex? Now remember, if we come in above our expectations, that's going to be bullish for the U.S. dollar. That means we're going to be showing strength against the FX majors. If we come in below expectations, that's going to be bearish for the U.S. dollar. It's going to show weakness against the FX majors. Let's just get right out to price action. Here's where I would be beginning my analysis today. This is a good look at the Euro-U.S. dollar weekly chart. Now, I know a lot of intraday traders aren't really focused on long-term numbers. Personally, I am. I trade long-term anchor points on short time frames. And then the idea is to identify areas where we're going to see buying and selling, reach in, take a few bucks, and then move on to the next trade. That's what I've been doing for the past decade. I really believe in that, but that's okay if you're a 5-minute trader, if you're a 30-minute trader, if you're a 1-minute trader, go get them. Just stick to your guns. Don't chase price. And remember, solid trade location makes you better than the next guy. And that's very, very important that we remember that. That is our edge. We apply an edge over time, and that's where the profitability comes from. And that's how you establish longevity in the marketplace. You see right here, this is a good look at a very, very compressed market. We have very tight market conditions here in the Euro-US dollar. And you'll notice right here, we're just looking for something to happen. We're looking for this thing to move. And if, in fact, it does move, we're going to be able to trade from our resistance level or our support zone. Now, remember, top side resistance, that gives us a decent opportunity to short a market or sell. A downside support level, that gives us an opportunity to buy and get long a market. For me right now, we're a ways off of our downside support zone. I'm looking at topside resistance as being a potential, really a potential trade as early as later today. Now, right now we're trading 108.78. Very, very compressed. You can see the last few weeks have been incredibly tight. But if we do get a break, perhaps later today, perhaps off of a maybe a weaker than expected NFP number, where that U.S. dollar loses a little bit of its swagger against the majors, then we could be looking to short something like a 110.50 or 110, a 110.50 or a 110.25. That would be my basic game plan. As far as picking a direction in the Euro USD, I see it a lot in the live chat right now on YouTube. Long or short, do we buy or do we sell it? In my view, that market is a no play until we see something break. Now, if once we break high, then we'll be looking to sell. If we do break low, we'll be looking to buy. But right now, we're a ways off of those trades. Very, very important that we're patient and we don't get carried away in what's likely to be very choppy price action right off the bat. So that's a decent look at what the U.S. dollar could be facing against the euro. We'll see exactly what happens. But right here, the other thing to remember is it's not just about the dollar or FX pairs. You can also trade things like commodities and equities. Now, I'm a commodities trader. My expertise is in crude oil. I've been in that game for a long, long time. And this is how NFP impacts your commodities and equities. Now, remember, if we're above expectations, that means if we get a really hot NFP number, really big jobs number, that's going to be bearish for equities and commodities. Expect weakness in gold, oil, and the stock indices. Now, why would that be exactly? Because we're thinking about interest rates, and more about that in a second. Now, if we're below expectations, we're going to be bullish for equities and commodities. That means that maybe the Fed's going to hold those rates low. Maybe we're going to see an economic expansion because that dollar may not be as strong as we once thought. So remember that below expectations is bullish for equities and commodities. Above expectations is bearish. Now, a quick example of that, let's just get right out to one of the hottest markets around, and this is the US 100. This is going to be your NASDAQ index. You can see I got a bunch of lines on the chart. If you're brand new to my streams, or if you don't know much about Fibonacci retracements or things like that, don't worry about it. We're going to make this real simple. You can see right here, here's your all-time high. All right, there's your all-time high in the NASDAQ. And then there's last fall's pullback right around October, November, December. And then we've had a really epic rally through the first 6 months of 2023. Now we're looking at topside resistance. That would be your sell. That would be looking to get short the market up there at 15,435. Interesting level. We're not quite there yet. But what we've seen this month thus far in early July is a pullback in equities. So we're off about 0.61%, very near flat. But the key thing to remember here is we have a big round number at 15,000. Now, 15,000 is an absolutely huge level when we start talking about the NASDAQ. Why? Because it's a big round number. Everybody in the world can see it. I can see it. You can see it. Everybody trading from coast to coast here in the States and from New York City to Tokyo, Japan can see that 15,000 is going to be a huge number for this NASDAQ. So what do we got? A big rally. Then we sort of sold off. But what are we doing? We're chopping sideways right around that key zone of 15,000. So for me, I'm watching 15,000 extremely closely. I think that potentially we're trading right now 15,066. I've got a 13-day moving average right there, exponential, at right around 1524, 15,024, 15,000 flat. In my view, that could be really an interesting support zone as we roll into this NFP release. Potentially, I expect 15,000 to get a lot of bids. If, in fact, we pull back and test that zone, we'll see. So to the top side, resistance would be somewhere around 15,435, and my downside bid would be 15,000. So remember those relationships between our hot NFP and a cold NFP and how that impacts commodities, equities, and also our FX markets. Now, I know we got a lot to cover, and I'm moving relatively quickly, but it's important that we set the table because we're burning daylight, and we got about 7 minutes until the number. Samson, good to see you. Samson, IJ, good to see you. Good to see you guys. Welcome back to the room. We got a pretty vibrant trading room. If you're watching out on YouTube and you haven't been a part of the action before, you ought to pop in. We had a big week, even though it was a holiday week here in the States. It was a big week. So, what is this all about? Why do we care about jobs in the first place? We're talking about economic contraction and economic expansion. It's all about interest rates. It is all about interest rates. So if we see a very, very hot NFP number, then we're going to be looking at rate hikes potentially. Why? Because we're still in that expansion phase, and that typically leads to inflation. Important. And right now we're at 5 to 5.25. We're going to be looking at another rate hike here relatively soon, we believe. Today's number really could sway our expectations. So what are we expecting today? Well, I mean, it depends on who you talk to. Right now, we had a huge number of really employment metrics yesterday, and the big one was ADP non-farm employment, looking at 497,000 over expectations at 228. That's double the number. That's more than double our expectations. So when I'm looking at these figures, we are awfully concerned that NFP is going to come in extremely strong and mirror that ADP number. Yesterday was a huge one of the biggest sessions I've seen, just because of the holiday, the 4th of July holiday, compressed all these news events into a single day. Very rare. And if you're in the trading room, we went over it, we broke it down, we talked about all the different ways we could trade this thing. Well, yesterday was a big day. Today is going to be big as well. Will NFP mirror ADP? And you can see right here, non-farm payrolls. We're looking for 225,000, down from 339, and our unemployment rate is supposed to hold firm at 3.7. So in about 5 minutes, we're going to find out if those prognostications are correct. For me, I'm not really too interested in what the NFP number is unless it's way above expectations or way below. For me, it's all about the unemployment rate. If we see that unemployment rate go up towards 4%, which I think is possible, if that happens, we could be in an interesting position for that equities open, which is coming up in just about an hour. So 5 minutes to go. And there's lastly, to put this into perspective, you'll see that we're looking at 339. We're sort of just flatlining for most of this year, down from January's figure. I expect us just to sort of come in on point. I would be surprised if we deviate very far at all from expectations. So that's what we're looking at as far as our expectations go. Let's get right back out to price action and see if we can spot a trade or two ahead of this key number, which is in about 4 minutes. One thing I always say, as soon as you guys see it in the room, shout it out. Shout the number out. I'm going around. I'm looking at numbers. I'm trying to figure out how to trade this thing. As soon as we see it, shout it out. I'm going to be relying on you guys to be giving me the number so we can exactly break down maybe a little bit of analysis of what to expect potentially in about an hour at that U.S. Open. Right here, gold. Everybody wants to know what gold's doing. I would say per capita, we have more gold traders in this community than I've ever seen in my life. I know a lot of pros won't trade gold. They don't like gold. Well, if you're trading spot gold, this is probably going to be a fairly live day for you. Monthly chart, all right? Monthly chart, spike low to a spike high. We've been an absolute incredible compression between 1943 and 1910 for quite some time. You'll see right here, July has been an incredibly compressed month. Granted, we're only about 4 sessions into July, but still, I mean, we're looking at deep compression here. So when I'm thinking about that, I go right back to our concepts of support and resistance that we just covered. What would our support zone be? What would our resistance zone be? Well, you can see right here, that 1910 level has been absolutely huge. And we've traded it really religiously going back to the 23rd of June. Boom, we hit it there. We hit it there. We had a big washout under 1900, and then we had a big-time rally back up towards 1935. And now guess where we're at? Right back around 1910. I see the questions blowing up in YouTube. Am I long or short gold? Do I need to be long or short gold? Neither. I'm waiting for this market to move. I think it's a lot like that Euro USD where you don't really know what's going on until it happens. And for me, just to spot a couple of decent levels for you. Keep an eye on this spike low. That's absolutely imperative. We know where that is, which is down there at 1893. 1910 showing up as legitimate support right now. So if you have to be in the market, do you want to be long or short right now? If you're either, it's high risk. 1910, though, I'm watching that closely. That could be a potential scalp here after this number. But if I'm executing that trade, I'm long from 1910, and I'm out at 1907.50. If that thing does not work, I am out. Now, from the top side, I feel a lot better about it. Wouldn't really hesitate short in 1942.50. Stop myself out over 1945. That's how I'd be looking at gold right there. Just think of this as compression, and we'll revisit these charts right after the number. But you'll see. That is what I would call that's our zone, and we haven't deviated from that for quite some time. One last thing we do want to cover here. Interesting, if we got some U.S. futures traders in here. I spotted this trade yesterday. This is the E-mini S&P 500 futures, largest futures contract in the world. We will see some action out of this today. Here's your daily chart. We had a big sell-off yesterday. We have a beautiful pattern, nice double top right there, spike high, and then we have a neckline. So remember, if we're trading double tops, keep a close eye on that area as topside resistance theoretically. I don't think I would be selling up there again. We've already done this twice. If I was going to play this, I probably would play it conventionally and be looking to sell beneath that neckline. So that's where we're at. I mean, we got T-minus, 30 seconds, something like that. We're just going to buckle up and get ready. For me, I'm going to be watching the gold market after the number drops. We're going to review our levels. We're going to take a look at what's going on with the dollar index. And then we have one other pair that's not U.S. oriented that we need to look at because there's an interesting pattern on it. So right here, let's go to our gold. Boom, let's get our 1 minute chart rolling. And you can see right here, that's our zone. Everything that's highlighted in yellow is our zone. And if we do look at that 1910 zone, that area has been absolutely huge for downside support. All right, let's see, 629. We got a few seconds left. We're just, okay, there's boom. There's your big break to the top side. There it is. That's what we're looking for. 1942. Do we get a 1942.50 to the top side? That's what we're looking at. Extremely bullish move here out of gold. We rotated right back up to that 19.25 level, which is absolutely huge. Remember, big round numbers attract action when you have a huge economic event like this. 209. Are we here in 209? 209's done. Alexa J has already taken the money out of the market. Done for the day, and it's time to go fishing. So you were long, you were holding long. Well, if you're holding long from 1910s earlier this morning, you absolutely crushed that trade. That's a $15. That's a $15 gain in just a few minutes. That's absolutely huge. What's the number? Bren 98's posting 209. Do we have a number? $10 plus $10, Alexa J. Wow. 209,000, Dr. Mizzle. Oh, wow, absolutely fantastic. So we came in just beneath that 225 expectations, and that was well beneath yesterday's ADP report. Now we've got the reversal. You can see this is textbook price action after what is a relatively muted release. Do we have an unemployment number? Who's reading it? Is it 3.7? What is it? 3.7, did it come in line? 3.7, 3.6. Okay, so unemployment did fall to 3.6. That is a much bigger deal. That is a much bigger deal than the actual number itself, than the actual NFP number itself. So, all right, that's absolutely huge. Samson, 3.6. Wow. Alexa J is holding gold before NFP. That's an astute play, Alexa. I don't disagree with you because you're holding above 1910. You just had to have a stop loss down, and I would have had it at 1907.25, 1907.50. That's the kind of trade that you really do almost live for, but you only get them like once a month. That's for sure. And then the drop in. Well, good for you guys. Well, that's a good look at what exactly these numbers can do. So what would that mean? Theoretically, what does that number mean towards our equities? Just looking across the gamut of equities futures right now, we're off. We're about flat. We're square. We're flat. I'm watching potentially 42.50 to the top side. If we get an opportunity to sell up there later in the session, that would be a tough one. Let's see. Connor Woods with a good question. Connor, will that really change the Fed's next decision? I think not. I don't think it does a darn thing for it. I think that your Fed is going to raise a quarter point in the July meeting, and after that, I think they're not going to be data dependent. I think it goes up again in September. We go off the board for 2023 somewhere around 5.5, maybe even 5 3/4. It depends on what exactly inflation says. So interesting stuff. Let's see. NMK. Let's see. He bought 1904 yesterday and sold the UCAD. Yeah, VJ has been absolutely crushing it this week, so that's fantastic. Done with gold. Yeah, that's a day's work. That's a day's work right there. Let's take a look at what happened to our Euro USD. Okay, we are getting a little bit of compression, a little bit of action up to 109.10. Sort of a little bit of a dovish print here for the US dollar. And we may get a shot at 110.50-ish. We may get that. And if we don't get it today, we can get it Monday. And we understand that once we get our numbers, we have a very good chance of winning. So that's what it's all about. Remember, they don't pay us to trade. They pay us to wait. And a lot of times that's really probably the best thing we can do is stay out. Let's see. Okay, dollar index. I wanted to show this chart as well for everybody out there, a little bit of analysis. This is a good look at 2022's range. Spike low, spike high. Here's our retracement, and here is where we stand for 2023. Tight, 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 and tight. That is rotation. That's textbook rotation. Now, what we did see off of that NFP number right now, it's a dovish print, no doubt about it. What are we looking at? Dollar index. You can be trading the CFD. You can also be trading this on a futures contract if you're finding maybe you're trading it on ICE. I believe the CBOE has a version of this. But right here, this is what I'm looking at to the downside, 102.36. Now, you can see that this 103.50, that's the dead center really of our yearly range, and that gives us an incredible sort of a profit target. We've already hit that one a few times, but if you're coming off right now, you got to be looking at 102.36 as being downside support. If we break that zone, if we break that area, let's just get the highlighter out. If we do break that line in the sand right there, then we're going lower, and what's the next port of call? beneath your yearly low right there. You've got a yearly double bottom at 182, and you've also got it at 178. So if you get an opportunity down there, we may be looking to bid right in there as well. But if we do break beneath that zone, then we could come off in a big way. So I'm watching 102.36 like a hawk. Right now we're printing 102.69. That could be a potential trade later in the day. All right, there's one last market that I'd like to sort of illustrate here, because oftentimes it's not all about the dollar every day. As we've seen throughout 2023, it's been really an ugly market dynamic. And when we get into markets that don't move, it is very easy to lose money. So we got to be real careful with what we do. This is an interesting pattern. I pointed this one out yesterday. If you're a pattern trader, then you may appreciate this, you may not. This is a bull flag. Now, we've sort of had some debate. Shain, it's not a perfect bull flag. In my view, it's a nice bull flag. This is the Great Britain pound Japanese yen. We have a lot of traders in the room that trade the guppy. And you can see right here, we had a nice big run up really beginning back on the 13th of June. Nice big run up. And since then, we've got compression. Now, a couple things make this special. Number one, we've got a big round number to the top side, 184 flat, and you can see it's been a fantastic resistance zone. There's a lot of sellers up in there. Well, what happens if we break that zone? We could really see a bit of bullish participation. Yeah, you're right. I mean, people are going to say, it's not a perfect bull flag. Good enough for me. If we get some compression right in this area, I would say for the next day or two, maybe the next day or three, or next week, we could definitely be looking to grab a breakout buy up over 184 and really play this pattern to the top side. Now, as you can see, we've got a little bit of a sell-off here on that NFP number. What exactly does that mean? We're talking about the pound and the yen. Doesn't mean a whole lot to me. I think you just got a little bit of action there from some hedging, maybe some big-time hedgers that wanted to get in and actually hedge their exposure to the USD. You can see the Japanese yen has caught a few bids in the last couple days. Why? It's a nice diversification tool. A lot of folks really like to keep at least some holdings in the yen just in case Western currencies sort of show some real weakness. Then you could say, well, my yen gains offset my Western losses. Maybe that's the way you want to go. Maybe it isn't. For me, I'm betting against the yen really at any chance I get. But right now, that's a pretty sweet looking bullish flag pattern in my view. We could certainly adjust it if we wanted to connect the lows. Something like that, I would say. What I'm looking for, a couple more days of compression, and then if we break above 184, we'll be looking to play that bull flag to the top side. All right, everybody, let's see. Hey, you can hold it. Good to see you. So in any case, I want to thank everybody for joining me on YouTube and in the trading room. Let's just sort of get on out. I know that a lot of you folks joined up for our raffle just as a point of call. We do have a few other streams scheduled for later today. I'm actually going to be back for the mid-session brief. We're going to talk about what happened at that equities open, and then we're going to get into maybe how to trade this thing going into Monday's session. Next week, we're going to have a full slate. We'll have probably up to about 6 live streams a day, so if you want to join us there, always fantastic. In any case, we are talking raffle now. We're talking $3,000 giveaway. Now, this sponsored by IC Markets. This is going to be our last raffle here for probably a month or two while we sort of decide which way the giveaway is going to go. But it is time to run it. I've gone on long enough, so let's go ahead and click the launch. And you can see right here. All right, everybody, I want to wish you the best of luck if you joined our raffle. And remember, this is going to be the last one for a few months, but no worries. We'll have something. We'll have some sort of giveaway or some sort of structure really to reward folks that wanted to frequent the website and some of our supported brokers. All right, without further ado, here we go. All right, the raffle is building, and look at this tech roll, and I want to wish everybody good luck that joined. We always appreciate your patronage, and thank you for joining us today for NFP. It's one of the funnest, one of the most fun days of the year, and I think we got some pretty darn good price action and sent you away with a few ideas, at least for the coming sessions. Congratulations to the first winner, Dankor 2000. Dankor 2000, you got a blue ribbon and a gold medal, so you got a few bucks there. Nothing wrong with a little bit of trading stake to add to your balance. Martini Bianco is our second winner. So we've got Dankor 2000 and Martini Bianco. Congratulations, everyone. That's anytime you get 1,000, and the Theory Man getting involved. The Theory Man is going to be our third winner there. So that pretty much concludes our raffle for right now. I want to congratulate all the winners and thank you for everybody that joined up. You've got Dankor 2000, Martini Bianco, and the Theory Man just grabbed a cool G of trading capital. And remember, this game's all about leverage. leverage. This game's all about being properly capitalized. If you're not a large cap trader right now, don't worry. Just because you don't have it today doesn't mean you won't have it tomorrow. And congratulations to our winners today. You guys are off and rolling. Take that grand, turn it into $5,000. Turn the $5,000 into $25,000. Take your time doing it. Don't be reckless. Build that capital over time. A nice 45-degree profit curve is what we're looking for. So congratulations to all the winners, and many thanks to all the participants. All right, everybody. It is bright and early, like I said, here in the Rocky Mountains up here in Montana. Can't really wait to sort of get on to the weekend. I got a little bit of traveling planned. I'll be back in Utah for next week, but my wife and I are in the process of moving, so pretty soon now the Rockies are going to be a reality for me every single day. Things like fishing, things like hitting the camping, getting up in the mountains, maybe hit a few rodeos, and then after the rodeo season, it's football season, so it's all gravy this time of year. I want to thank everybody for joining me. If you have any questions at all, feel free to drop them in my private chat. You just ask, and we'll do our best to get to you. We have a pretty good team of trading coaches here, Nick Quinn, Connor Woods, and myself. A lot of experience. There's a lot of experience there to draw off of. Just remember, if you struggle today, it doesn't mean you have to struggle tomorrow. And if you struggle tomorrow, you don't have to struggle the next day. But if you stay in it long enough, you will win. You just have to put the time in and make the effort. Fantastic stuff. I want to thank everybody once again. Great session. We will be back at the mid-session. If you're interested in how some of those levels broke down, if you're looking for some trade analysis and potentially some ideas for early next week, feel free to drop in. All right, everybody, until next time, trade the action well, and we'll talk soon. See ya.